You're watching the NWR Virtual Investor Conference, May 2020. On the line, we have Chris Junks from Elementos. Elementos is focused on exploration and production of high-grade tin resources at its two key projects, Oropesa and Cleveland. The company's 100% owned Oropesa project in Spain has a JORC-compliant resource and an economic study due for completion before the end of 2020. At its Cleveland project in Tasmania, Elementos is developing a study examining options to monetize the tailings, open cut and underground tin copper resources. We have Chris Junks joining us today. Chris is Elementos Executive Director. He has more than 20 years of experience working on major minerals processing, refining and power projects both in Australia and the USA. He is currently the Managing Director of Synergen Met. He was a founder and Managing Director of Rockwell Minerals, the company that merged with Elementos in 2013. Over to you, Chris.
Thank you very much. It's really great to be here, and I'd like to thank the NWR team for inviting us to present today. It's actually an exciting day for us at Elementos. We issued a scoping, a economic study to the market this morning. It's something that we've been working on for about 6 months, and we've been talking about for a while, but now it's finally out in the market, and that will be the focus of my presentation today. That makes the cautionary statement pretty important for those who are listening today and who are interested in what we are doing. Our economic study is a mix of levels of work with different levels of accuracy. Some of our parts of our study were done to a definitive feasibility study level of accuracy, and others were between scoping and pre-feasibility. So this cautionary statement is important, and particularly in the context of today's release. So our vision for Elementos is to become a major global tin producer, and that's really focused around the development of mining operations that are cycle proof. And by talking about cycle proof, we're really talking about where we're in right now with COVID-19 and the way that the tin price has dropped, but also looking over the last 10 years at where the tin cycle has been. And we're looking at mining operations that are less, all in sustaining cost of less than $14,500 per tonne. And if we can find those projects and develop those, we know that we have a strong business ahead of us as a miner and a tin producer. And that's what we actually have when we're looking at our two projects, Oropesa and Cleveland. We have two cycle-proof projects. On Oropesa, we released the economic study this morning. It does show a very strong investment case. I'll go through that in a fair amount of detail today. Oropesa is one of the world's highest grade open pit tin projects under development, and will be our cornerstone development and operation as a company. Our production target at Oropesa is just over 2,400 tonnes a year of tin metal, and that'll be sold as a concentrate, 62% concentrate, so just under 4,000 tonnes a year of concentrate. The economic study that we've generated really stands on the shoulders of 10 years of work of drilling, geological development, feasibility work in metallurgy, and the environmental work that we've been doing and the work with the community that's been extensive over the last 10 years. I won't really talk about Cleveland today because today's focus really is about Oropesa. But Cleveland is a combined tin copper, open cut and underground project in Tasmania. And we'll be developing Cleveland over the next few years, really starting with environmental work and some additional metallurgical test work. But really today's focus is really on Oropesa. So where is Oropesa? Oropesa is in the Andalusia province region in Spain. It's about a 2.5-hour drive north of Seville, about an hour and a half northwest of Cordoba. It's very close to a town you can see on this map called Fuentealbijuna. This is really a mining region. If you want to be developing a mine in Spain, you really want to be doing this in Andalusia. In this region around our town, there is a significant history of mining, of copper mining, of other base metals and coal. As you're driving into Fuentealbijuna, there are a lot of historic mining developments that you can see, and the local town and local region has a workforce that is actually very familiar with mining and has a lot of experience with mining. So we are in a great place to develop this project. Not far from us are very significant base metal operations, the Las Cruces copper mine, the Rio Tinto copper mine, And this really forms a core workforce in this region, which is what we'll be tapping into as we move forward with this project. So to the economic study, as I said earlier, we're very excited to be able to issue this to the marketplace. And what are the fundamentals around our study here? It's an open pit operation is what we're planning. Annual ore feed into our processing facility will be 750,000 tonnes per year, which will generate just over 2,400 tonnes a year of tin. For our study, we've used a tin price which is sub $20,000 a tonne, 19,750 a tonne. This is an important number to think about and to understand. You know, the 10-year LME tin price average is about $20,500 US a tonne. So we're really forecasting this study on a sub-average price, and even with a 19,750 tin price, we've got a very strong economic case for this particular project. So at that price, we're looking at just under $50 million US annual revenue, and our operating costs about $28 million, all-in sustaining cost $11,800 a tonne. It's a fantastic all-in sustaining cost for a tin project, which gives us an annual operating margin with this tin price of $20 million a year. CapEx for this project is about $52 million. That CapEx is really reflective of costs in Spain, and it reflects local labour and sourcing a lot of local equipment and materials. So it gives us altogether a pre-tax net present value of $92 million, which we're very, very happy with, and an internal rate of return of 25%. And in using that tin price and looking at the current market and where the market's going, we think this is a very strong economic case for investment. And we're very happy with the process that we've taken over the last 18 months to negotiate and acquire the Oropesa project, which culminated in January. But this really reinforces the investment case that we started off with as a board, and makes us excited to move this forward into production in the next couple of years. A key aspect of this tin price, you know, driving net present value really needs to be shared. If we're looking at a 10% increase in the tin price, which is really kicking it up to about $22,000 a tonne, you know, we're looking at $130 million net present value. And this just shows the impact that the tin price has on the project economics. But it also shows that if we're looking at a $15,000 tin price like we have today, we still have a positive net present value. And it just shows the robustness of the economic case for this project. So just a bit more about the project. It is one of the world's highest grade open cut tin projects. The economic study production target comes from our 2018 JORC resource. We have a significant drill planning effort in front of us this year. We're looking to expand and upgrade the size of the existing resource, which will then lower the waste to ore ratio for the project, which again improves the economics. And we also have a significant exploration target, which I'll come to later in the presentation. So our measured and indicated, we've got significant measured and indicated resources, and gives us a total 51,000 tonnes of tin in our measured and indicated resource. So we're very excited to move forward with this amount of metal in the ground for us to proceed with this project. So what is the project going to be? It's a simple open cut mine. It's a simple drill and blast truck and shovel operation. This is a type of mining operation that is very familiar in the local region. Very competitive mining costs of $21.95 a tonne. The interesting thing about mining in Spain is that a lot of the mining is done by civil works contractors that are very, very experienced and very, very efficient. And so that allows us to keep our mining costs low. Our life of mine waste ore ratio is 11:1. And our capital expenditure really will be minimised by our mining contracting model. So as you can see the image there, that's the final design of the mine pit and the waste dump in our final year 14 of our economic study. We actually have an animation of that mining process, which I'll forward the link through to the NWR team, and they can forward it to those that are on this call. in the next couple of days. It's about 1:30 animation, but it's really worth watching because it sees how this particular mine model is built and how it will be mined, and the way that we use the pit towards the end of the life of mine as a waste storage. So we're trying to minimize space on the surface and utilize that particular, the mine pit. Conventional process flow sheet for this project. It's simple: crushing, ore sorting, grinding, sulfide float, gravity separation, and tin float. The ore sorting is a really interesting part of our flow sheet now. As you can see in that image, we have a small area called Tomra. Last year, if you've been following the company and our announcements, we completed quite an extensive ore sorting test at Tomra in Germany. And what Tomra does is it sorts the mineralized ore from the non-mineralized ore before it moves into the process plant. So you have an upgrade in your grade going into your plant, but you also have a reduction in your tonnage of material going into your plant. So you can potentially reduce your overall operating costs in your process facility. And so we got some really good results from Tomra, and we now see that as being a core part of this flow sheet as we move forward. As I said earlier, plant capacity 750,000 tonnes a year, which is pretty standard for a tin operation. 76% recovery to a 62% grade concentrate. 76% recovery is, again, pretty standard, pretty vanilla for a tin operation. And the 62% grade tin concentrate is the market standard around the world for selling to smelters. So we separate the sulfide and normal tailings so that we can manage those sulfides, and then we thicken and filter for storage. So our process flow sheet variable cost looking at about $10.97 per tonne of ore. Infrastructure on site, we do have access to very low cost power, and the power lines traverse the project site. There are sealed roads right nearby, and we have an export port 185 kilometres away, so this will be trucked concentrate. As I mentioned earlier, this is a very experienced local mining workforce, and we have water readily available for the project. So what's our development plan with Oropesa? We're moving from this economic study into a definitive feasibility study. So we're looking at all the work that we've done to get this study completed and how do we step through and get up to a DFS. In parallel with that, we have our environmental impact statement resubmittal. We've submitted that previously, and there's about 5 studies that we were asked to do by the local state to just to boost the document that we'd already submitted, and they're currently being written and completed, and that process is being done in collaboration with the local state. We've got drill planning that's mostly been completed, and then we're looking to start drilling in July. So this is resource conversion to reserve, looking at sterilisation drilling, and we'll also be doing step-out exploration drilling into some targets that we see lying parallel to our existing ore body. Continue on with our geotech and hydrology and additional metallurgical test work. And then back into the start of 2021, we'll be starting in earnest project financing discussions. We've already started those conversations with a few select groups around the world who are interested in tin and interested in base metals. And there's a lot of encouragement in that market for financing this project into the future. So a little bit about tin. It is the most in-demand metal for the new energy future. So demand for tin is high, is always strong. It's essentially the solder that binds electrical circuits together, and it's the electrical metal. It's the electrical metal that people forget about in many respects, but because it's just sitting back, doing its job as solder, and it also sits in battery chemistries. So electric vehicle, robotics, renewable energy, computation, tin's found in them all. And it's a very, very important element to make the world go round. The interesting thing about the tin market is that, this slide has been produced by many tin companies like ourselves, and that we always produce it because it's always interesting. It shows that, the demand for tin is going to be the greatest of all of these electronics and battery metals over the next few years. And we see that in our forecasts, and we see that in the demand supply curves as well. So this is a chart that really talks about production forecast and shortfalls. That shortfall, this chart really probably should move slightly to the right. We're all seeing a low tin price at the moment, and we're also seeing demand drop off. In Q1 this year, tin usage dropped about 20%. But we also know from experience and history with financial crises where consumer demand for goods, which is where tin is used, dropped off, that always came back, and the resurgence in the tin price went with it. So we're seeing that there'll be a lower tin price for the next 12, 18 months is what the forecasts are saying, but then there'll be strong recovery from there. And that strong recovery really will tie in directly with when we'll be looking to come into production in a few years' time with Oropesa, and then followed by Cleveland. Interestingly, about new supply with tin, it's actually quite limited because the potential projects, there are very few potential projects, particularly to invest in the Western world. There is some tin artisanal mining in Africa, but there are really no new big tin discoveries, and so that supply is going to be constrained into the future. And so we're really coming into a market where we see the economic potential for this project as growing over time because of that shortfall. So what's the investment summary for Elementos and really for our Oropesa project? The economic study shows a very strong investment case for Oropesa. Tin is in demand, and it will be the metal that is most impacted by new tech. Elementos provides exposure to 2 projects, and they're both cycle proof, and they're both in development, and we have a clear strategy to become a significant global tin producer within the next 5 years. The Oropesa exploration target I mentioned earlier, which is stepping out from our existing resource, is estimated at between 35 to 50 million tonnes, which is significant. We look forward to drilling that by the end of this year. We have a very experienced board and senior management. We've all got a lot of experience in exploration and development, and we've just announced our project manager is our Spanish-based project manager, and he's now taking over responsibility for the development of the Oropesa project. So corporate overview, our share price is now 0.3 as of today, not 0.2 of a cent, which is exciting. Obviously, investors in the market have recognised the value of this economic study, which is great to see. We've just announced a couple of weeks ago that we're signing up to a royalty for Cleveland and Oropesa, which will provide us with some cash for the company in the next probably 6 to 8 weeks, and then options for additional funds into 2021. And that really concludes my presentation. I'm more than happy to take questions.
Thanks, Chris, for your presentation. You've had some questions come through in the last 20 minutes or so. Someone wanted to know, what was the delay in the completion of the economic study which you released today? We'd been expecting it for some time now, they said.
Sure. We started the economic study in earnest in November last year. And I guess the delays were Christmas New Year period. And then into February, we actually realized that we needed to redo our mine plan. So we took a breather, redid our mine plan, which is what you see today. And that mine plan actually created a model which reduced our stripping ratio and actually came out with a much better economic model, so it was worth the wait.
Good to hear. And where is the funding for the upcoming programs likely to come from? What will the funding package perhaps look like?
So the funding question is an interesting one. We've got a lot of different options that we're looking at the moment. We're looking at strategic partner options. Those conversations have started. They've slowed down a bit because of COVID, of course, but we're talking to a number of potential large strategic partners. There are always equity options moving forward. One of the reasons why we did the royalty is to be able to provide us with funds in the short term, and we're very, very happy with the deal that we've done there. But there are a number of different options that we have in front of us, which we're excited by. And can't really give anything more than that, but there's a lot of things that are being done in the background to address that financing coming forward.
Maybe you can give a bit of detail on the drill program, which is planned for later this year.
Sure. No problem. So the drilling program really consists of 3 elements. One element is attached to our environmental study submission. And one part of that is then additional drilling so that we can get to a reserve and move to DFS. And then the third part of that is the exploration drilling, which is what we're very excited by. So we have some IP anomalies that we've presented in the past that are to the north and south of our Oropesa ore body, and they have a very similar signature to what we have at Oropesa. So we are looking to drill those, we've got quite a few targets to drill, and we're looking to complete that this year.
The Cleveland project, Chris, when are you likely to commence work on the ground there in Tasmania?
Well, we're continually doing work at Cleveland, but the next phase of Cleveland is really starting the environmental application process to proceed with an initial project of tailings plus open pit production to produce tin and copper, tin concentrate and a separate copper concentrate. So look, that'll kick off this year. It's about moving it forward in a systematic way that is very similar to what we've done in the past with the environmental applications, but now really looking at that from when we add in the open pit operation to the tailings. So there's plenty of work to be done there, and we're looking at that this year. Mm-hmm.
One of your investors has just sent through a question. Do you think that the 0.7 cent options can get exercised?
That's up to the market, and it's up to those that are exercising them. So, we see the value that is in Oropesa. I think that the economic study that is issued today we can show the market the value that's in Oropesa and the value that we have as a company. And, we're looking at how that re-rates the share price, in the very short term.
Thanks for joining us today, Chris, from Elementos.
Thank you very much.
And thank you everyone for listening to day 2 of our NWR Resources Conference, May 2020. We're so happy that you could have joined us through all the presentations today and yesterday, of course. They will be posted up online for you all to see, and you will be receiving an email with details to watch all of them if you want to recap on the day and yesterday. Thank you, and we'll see you later.